All right. Well, looks like we're here live in the room. Helene, it looks like we have the room opened up
Yeah.
for today's this Tuesday, first day of July. So just turn the calendar over, finish the second quarter, and now into the back half of the year. So it's hard to believe that that's the case. We're in the second half of the year, but here we are.
It
Some
is.
exciting things going on in the market. So.
Yeah, I feel like this year is just flying by, so it is crazy.
Absolutely. It's been an interesting 6 months, a lot of peaks and valleys in the market, a lot of really volatile trading. But again, that's all part of the nature of trading these markets. So I'm excited to be here live breaking it down for you. And Helene, I think we have some interesting things to share today. Did you want to lead it off, or did you want me to jump off and just maybe actually I can start off with just sharing the chart of the S&P because I think there's a few things we want to share there.
Yeah,
So
that'd be
maybe that's a
great.
good place to start.
Yeah, go for it, Blaine.
Yeah, let me go ahead, excuse me, and get my screen shared here so we can go ahead and dive into this. But so yeah, folks, right here is a chart of the S&P 500. And one thing that's incredibly exciting today, if you've been following some of my messaging I've been putting out there for the last couple days. This is something I've been tracking for just about 2 weeks now, and I really haven't heard all that much about it. But it's
Hmm.
that we're getting a golden cross buy signal in the S&P 500, and I was anticipating it was going to happen, sometime early this week, and it finally happened today. Helene, you can see that 50-day moving average finally crossed above the 200-day moving average today. And
Just
as
barely,
we
but it,
know,
it crossed.
it did. It definitely crossed. Yesterday, there was just like this little sliver of air and light between the two. And today, it finally had that bullish convergence, and that is a just massive buy signal. It's one of the most reliable technical signals. We're talking about a longer term trend, so I was super excited to see that today.
Yeah, I'm excited to see that too, definitely was already feeling bullish about things, but that is just that additional confirmation.
Yep, absolutely. So that, as we know, according to our, historical testing and data we've pulled, when this buy signal happens, of course, it doesn't mean things are going to rally, 20% immediately right thereafter, that month or anything like that. But it typically precedes a very nice move to come in the markets following that. So, something very significant to take note of right there. But with all that said, Elaine, things after the recent run, I think we both are on the same page that at least in just the short term here, while things are looking very bright for the medium to long term
Mhm.
horizon, in the short term, I think we're both kind of expecting a bit of a slowdown in momentum. Do you want to say a little bit more about that?
Yeah, absolutely. I mean, just looking at the chart here, we see a couple technicals telling us just that things are overheated. And so, first up, of course, is the Keltner channels, our overbought, oversold indicator. When a stock or ETF is trading above that upper channel, it indicates it's overbought. It's likely to retrace in the short term. SPX is clearly trading above that upper channel.
Yeah.
It is due for a pullback. That being said, it doesn't mean immediately it pops over the upper channel and then pulls back. A stock or ETF, they can run for quite some time in that overbought territory, but they will retrace eventually. And so that's what we're seeing there. And then also RSI, I see you have the RSI up, I believe, is it the 5 day?
It is. Yeah, it's a 5-day RSI for sure. It definitely looks overheated there too.
Oh, absolutely. I mean, it's well above 70. What's it at right now?
It's
80,
just below 84.
84. Yeah, if 70 is the threshold for overheated, 84 is red hot.
Yeah, and clarify, folks, on that RSI chart, you can see that the shaded areas above that level of 70, those shaded areas on the top of that RSI chart, like we see right now, a little patch here, a couple spots there. Typically when that RSI gets up above that level, it does not typically stay there very long. And
No.
that's for a reason. It's because that retracement Helene has been talking about typically comes shortly thereafter.
Exactly. And, of course, retracements aren't a bearish thing. All bull trends have retracements. It's a normal part of that upswing, but
Hmm.
it's something to expect in the short term. So, I know that we're definitely positioning accordingly for that short term pullback.
Exactly right. And another thing too, Helene, that I'll add is that we were somewhat kind of anticipating this was going to happen. One, after just the recent massive leg up that we saw
Yeah,
really
of
over the last 2.5, 3 months off of those April lows. At some point, obviously stocks have to kind of pull back and take a breather, and
course.
people are readjusting portfolios and such. And then this is more just kind of a mechanical reason too. As we started off today's call, we just turned over the calendar this may seem kind of silly, but this is just kind of how things function on Wall Street. Is big fund managers, they're required to make moves in their portfolios on a quarterly basis. A lot of them, or on a 6 months, half of the year basis. And we literally just turned the calendar yesterday. Yesterday was the final day of the second quarter, final day of the first half of the year. So of course today, the first day of the third quarter, first day of the second half. So you're getting a lot of portfolio rebalancing en masse. And, what the effect is you're seeing that slowdown in momentum that Helaine and I, one, have been anticipating, but we're starting to see, take shape somewhat today. Because, I mean, Helaine, you just pull up a list of all of the top performers on the S&P 500 year to date this year.
Hmm.
I mean, gosh, I mean, you just look today, look at look at all top 20, top 30. I mean, just go down the list and see how many of them are having a massive readjustment today.
Yeah.
As funds are rebalancing, and I think we're starting to see somewhat of a rotation out of those stocks, at least temporarily. It's not that the trend's over, I don't believe, but what do you think about that, Helaine?
Yeah, I think that people are looking for catch-up plays at this point. A lot of stocks are hitting new highs and they're way overbought, and there's just only so much room they can run at this current rate. They have to pull back, people have to take profits. And then you see money moving into these other underperformers. And so I think that we're going to start seeing that, as you said, maybe in those value stocks, maybe just in underperforming sectors of tech or other sectors. So definitely something that I'm watching. And can you go ahead and zoom in on that SPX chart, maybe the 3 month?
Yeah,
Just so we
absolutely.
can
Let
see
me
a
go ahead and
little.
readjust it here.
I did just want to note, if you guys were with us last week, we had talked about a very specific candle we were seeing because we thought this is going to lead to a bullish breakout. And it was, Blane, can you point out where that candle was? It was a bullish engulfing just about a week ago.
It was this one right
That
here.
one. You and I looked at this and we were like, this is bullish. This is
Yeah.
going to lead to a breakout. Not only is it a bullish engulfing, but also it was bouncing off the middle calendar channel. We had gotten really great news on that day.
It
Was it
was, it was right before the close. The market started sniffing out that the, conflict that had really boiled over in the Middle East may actually be coming to an end. And right after market close, we got news that there was a ceasefire. And, fingers crossed up until now, there has not been any further flare up.
Yeah, but I remember we both were like, this could lead to new highs. And boy, do I wish I bought a FPY call option on that day.
Yeah. Yeah. Exactly. But yeah, no, I mean, we saw that pattern right there, and I think we put that out there. I know we mentioned
Yeah.
it in the TOD live call. I sent it out through our Telegram channel. We put that out there in various places, saying like, hey, guys, we're so close to all-time highs at that point right there, and we saw that candle. Just we kind of saw kind of the whole, kind of the whole stew coming together, right? We saw all the
Exactly.
pieces, required to make this run at all-time highs, and we're like, hey guys, this is it right here, and that's exactly what happened. We've gone and set a handful of new all-time highs from that point in relatively short order. So really glad to have seen that play out. But again, at this point, like we said, Helaine, I think there's some rotation happening, and
Definitely.
we're going to start adjusting for that, and
Yep.
just kind of seeing where things play out.
Exactly. That play that we saw a week ago is coming to an end, and now we're seeing that pullback.
Yep, exactly.
Absolutely. So I think
Yep.
that's a good point then to go ahead and look at our trades of the day.
Yeah, I totally agree. Do you want me to go ahead and highlight mine, and then you can
Yeah,
take over the screen share in a bit?
sure thing.
Awesome. Perfect. Well, I'm going to go ahead and highlight mine. And again, this is kind of, playing off of that theme that, at least here with, most US equities and, US markets, we've seen just crazy momentum to the upside, breaking out to new all-time highs. And, we're starting to see a bit of slowing in that momentum and, anticipating we might have a little bit of, chop around for a bit. We might eke out a couple new highs still, but, likely due for a little bit of chopping around at these new all-time high levels, while things consolidate, while there's some rotation going on under the surface. So with that in mind, that's what led me to this trade pick that I wanted to highlight today. And this is actually, if you've been following outside of U.S. markets, international markets, particularly international developed markets, have been performing fantastically this year. And this right here is just an ETF that captures just a small slice of that. This is the EWU, so this is the United Kingdom ETF. So this is an ETF. It's a basket of It holds stocks that are all UK companies. And as you can see, fantastic looking chart here for this ETF. It's super low cost. It's only $39.84 per share. So it's, very trader friendly. It's very low cost. But again, you can see the great trend, going from the lower left to the upper right. Love to see that. And we have a nice technical buy signal going on here too. We have our red line here, which is our 21-day EMA. It's trading above our 63-day EMA. So that's, a great kind of intermediate term technical buy signal. And you can see that buy signal generated back in mid-April as the ETF was rapidly recovering off of that tariff sell-off that we had in early April. And again, down here too, we have a couple, secondary indicators we're looking at. This is an on-balance volume. So this is just kind of confirming that really bullish trend we're seeing up top over the past couple months. What this is looking at, if you're unfamiliar with on-balance volume, it's just it's a cumulative line that's looking at the total number of shares traded and whether the stock price was up that day or down. And it's just a sum of that total of volume. So it's just looking at the total volume of shares traded. And each day, it's just adding or subtracting to that line based on whether the stock was up or down and how many shares traded. So you can see right here, just really significant accumulation here for EWU, really nice positive sign there. So that's suggesting that this is a very durable trend that, really has some staying power because, we're seeing a nice accumulation period here, confirming that momentum. And then down below, this is an RSI chart. It's a little bit more zoomed out than the one we looked at just a second ago. This is a 14-day RSI. And, you can see clearly that the RSI here for EWU it's not in overbought territory. It's hovering right about 63. So, it means we have a nice bullish stock, but it's not quite in overbought territory because it's not above 70. And again, we see that confirmed up top here as EWU is not trading above the upper Keltner channel. So it's in a really nice place, really attractive entry point for a trade here. Really looks like, after trading down a couple weeks ago to the middle Keltner channel there and now bouncing off of that, it looks like this one is ready to spring to new all-time highs. So keeping that in mind, I was thinking this might be a good way to play this one is actually just looking at a directional call option purchase.
Okay.
So I had actually the strikes are limited here. They only have monthly expirations for this ETF. And, I thought August might be a little too far out. So I just stuck with the July 18th just for today's example. But I was looking at the 36 right here. It's actually a couple cent lower when I looked at this earlier. It was down at 395. But I went ahead and took a look here. And you can see, pretty nice risk reward here. It's only costing about $3.95 for this call. And you see if the stock rallies, it has some pretty nice, really solid return potential here for this call. So I thought that would be a pretty interesting setup given the kind of the current rotation we're seeing here in US markets.
Absolutely. And that leverage is great. I mean, when the stock is up 10%, you could make 99% on your option. I mean, you love that.
Yeah, exactly. Yeah, near 10-to-1 leverage. So, really nice upside potential for this call. And again, it's the risk there is only that 395. So, pretty trading friendly there.
Absolutely. I love the pick. It makes a lot of sense, and it looks like a great setup. And technically, looking at the technicals too, it's very strong, very, very bullish. That confirmation on multiple levels. We'd love to see that.
Absolutely. Yep. Yeah. So we'll definitely keep our eye on that one and see how it performs. But Helaine, I know you have a trade too. So do you want to go ahead and take over the screen share and show the folks
Yeah.
what you have today?
Absolutely. So I went a different route than Blane. I'm looking at Shopify, e-commerce platform here. And my thought here, first of all, looking at some of the technicals, I like to look at the 35-day EMA through historical testing. We've found it to be statistically significant, meaning that if a bullish stock is trading above that 35-day EMA, that means it is confirming a very strong bullish trend, and real potentially a sustained bullish trend from there as well. Additionally, Shopify is trading above that 200-day moving averages. Both of these are going to confirm the trends. The 200-day confirms the long-term trend. The 35-day EMA confirms the short-term trend. So we've been able to confirm that bullish trend. Additionally, Shopify, it is a tech stock. It's one that we haven't been hearing a lot about recently. I think it's one that's kind of going under the radar. The performance has been good off of the April lows. I mean, it hasn't been the best ever. And because of that, I think that it still has a lot of room to run sustainably because it's not soaring and just having a parabolic move. It's in a sustained bull trend, and that's what we're seeing with the series of higher highs and higher lows. We're seeing confirmation of that bull trend. We're seeing breaking above previous highs, that March high. We're also maybe that late February high. We're seeing breaks above that. These are all bullish confirmations of the trend for Shopify. And additionally, I have MACD up. You kind of have to zoom in on this one to see it a little bit better. So let me go ahead. I'm going to zoom this into a 3-month view.
Yeah, that'll be good. It's yeah, definitely a little bit. It looks like it's just barely breaking out to a buy signal there.
Just starting to. So an additional confirmation on that bull trend for Shopify. So really like where they're at. As I said, it's not a parabolic move, but you don't need it to be parabolic. You just need it to sustain within a range, really. And that's the type of trade that I'm looking for. One that can profit if your stock is up, flat, or even down at option expiration. And so I'm looking at a call option debit spread for Shopify. I went with the August expirations, the August 15th, and I'm looking at the 95-100 strike call option spread. It's going to make 28.9% if your stock is up, flat, or down 7.5% or more at option expiration. So that gives you a tremendous amount of room for Shopify to move, and you still are able to profit. And so that means the break even for this one is 98.88. So as
Yeah.
long as Shopify closes above 98.88 at option expiration, then you're going to make money. So let's look at that on the chart. 98.88. It is all the way down below that lower Keltner channel. Tremendous amount of downside protection. And I will say part of that decision in going those strikes is because they only have 5-point increments. It kind of limits me to what I can and can't trade for Shopify. So being conservative in a position like this, also knowing the broader the broader market conditions that things are overbought, we could see a price retracement broadly, is why I went with that more conservative position.
Yeah, no, that's a great looking trade there, Helaine. And in fact, too, I mean, just doing the quick math on it, it looks like that one, since you're selling the 100 strike, that one actually could sell off a little bit more than 10% and still
Yeah.
actually realize that full profit potential. So that's a great looking trade, great find there.
Thanks, I appreciate it. Yeah, I really like it. And as I said, I personally love call option debit spreads because you are able to profit even if the stock moves against the direction you think it's going to move. Like everything's telling me that Shopify is bullish, but it could drop 10% and I could still make money on the position. And that is just amazing. I mean, that increases your odds of having a winning trade.
Yeah, I mean, just imagine, like, think about it driving a car. Like, say you could get to your destination by taking a left, taking a right, or going straight, but either way, you're going to get there. It kind of think about it in those terms. It just greatly increases your possibility and probability of the trade ending up, giving you a good result. So that's fantastic. I love it, Helene.
Appreciate it. Appreciate it. Well, I also loved your trade pick today too.
Yeah, well, thank you. But yeah, no, interesting times in the market, just ripped to new all-time highs. So obviously that's a great feeling and a really good sign for markets. Finally again breaking out to new all-time highs is a really great sign. But again, we're fully anticipating, for a number of different factors here. A little bit of chop, probably a little bit of market rotation. We're certainly due for that. There's been a wide dispersion between the market leaders and those laggards. And it's probably time to see a little bit of broadening out in the rally. So anticipating that, but Helene, also kind of an interesting week too, because this trading week is so compressed because of the holiday here in the US. So,
Exactly.
it could be an interesting, round out to the week. And plus we have the jobs report coming on Thursday. So any thoughts about that?
Yeah, I mean, and typically we see a big move on like a Friday, but we just don't have we don't have Friday this week, and we have a half day on Thursday, so
Yeah, we're all
it's
making
gonna be
hot dogs on
interesting.
Friday.
Yeah, I would expect later volumes too because people are traveling, so just definitely keeping an eye there, and yeah, we'll see where it goes.
Yeah, yeah, and kind of all eyes on the job report at this point. That's coming out Thursday morning, and for a number of reasons there too, that could really move markets. So that's kind of what we're watching here, folks. But I think that's just about all we have for today. But thank you all so much for joining us here for TOD Live. We love getting to sit down and do these sessions and kind of, show you what's going on in our mind, what we're seeing, here, and what we're tracking to, see where markets are going to go. And hey, stay tuned, folks. We actually have something super exciting that we're going to be sending out later in the week. So, keep an eye on your email. There's, pretty interesting little offer that we have, up our sleeve for you. So, make sure to
And
keep your eyes peeled for that.
Blane, before we sign off, we did just get a question from Tony
Oh,
about
okay.
what do we think about BA.
Oh,
So let
yeah,
me
yeah,
go ahead. I'll pull that up. I'll share my screen and we can jump into that for a minute before we wrap up.
yeah, yeah, absolutely, no doubt.
Okay, let's do it.
Yeah, I know that BA had recovered nicely. I know Boeing and GE had a bit of a dip the other day following the Air India crash because it was, a little uncertain, at the beginning, right, in the immediacy after that, whether they were going to have some culpability, either one of the companies. But it seems like that wasn't the case, and they've kind of quickly rallied back to their highs. So it looks like they're maybe just kind of roughly flat on the day. It doesn't look like they've done too much.
No, yeah.
But it's definitely nice to see that recovery. I mean, that's talking about you know, pattern technical trading. That almost kind of looks like in a very clear cup and handle pattern, which is very bullish.
Hmm.
So any thoughts you have, Helaine?
Yeah, I agree. I mean, I know that we had been watching Boeing before that sell-off. And so, you can see that sell-off and consolidation pattern for a lot of June there. And then typically after consolidation, you're either going to see a break up or down. I mean, at some point, you're going to see a movement in either direction. And then often it continues in that direction. So when we saw that break bullish for Boeing, that was a really bullish sign for Boeing in general and for the future price movement according to technical analysis. So I really like where they're at. They hit that upper channel, they pulled back down. They're about flat for the day, but I personally like where they're at. I would want to see further confirmation of that continued breakout before I would personally take a directional short term position on them. But from what I'm seeing right now, I would be bullish on Boeing.
Yeah, for sure. And to add to that too, Helene, looks like down on the MACD chart, it looks like you're about to
Yeah.
have a MACD, breakout and buy signal happen there too. So definitely an interesting looking setup. Thanks for posting that in the comments.
Yeah, I appreciate the comments. We love
Yeah,
getting the comments and being able to check out some of your stocks that you guys are interested in. So always appreciative of that.
yeah, absolutely. Thank you, Tony. Appreciate that.
All right. Well, I think with that, that is all we have time for today. But thank you guys so much for joining us. We absolutely, as Blaine said, we love doing these events. We love talking about stocks on the market. This is what we eat and breathe. So
Yeah.
love getting to share it with you all. And I know we're gonna be back here again on Thursday, same time, right?
Yep. Yeah, I think we're going to have another TOD live on Thursday. That's the plan, and get in preparation for the holiday on Friday. So everybody have a great rest of your week, and we'll see you back on Thursday here in just a couple days. And yeah, happy trading, everyone. Take care.
See you guys.
See you, Helene.